Well, later this week, the government is going to release retail sales data. First, though, we have the CNBC NRF Retail Monitor for you. Ready to go this morning. Senior economics reporter Steve Leisman joins us now with the numbers. Hey, Steve.
Good morning, Joe. The CNBC NRF Retail Monitor jumped to its best monthly game since we began assembling the data in 2022. That's a likely sign of some combination of a resilient consumer, big midsummer promotions from retailers, and possibly tariff-fueled inflation. The NRF Monitor, it's fueled by real credit card spending data from Affinity Solutions. It jumped 1.5% in July from a negative 0.3% in June. The measure is ex-autos and gas. Total retail sales year over year up a strong 5.9% from 3.2. Core retail, which also removes restaurants, rose 1.6 on the month from that negative 0.3. Year over year was also 5.9%. July included Amazon's Prime Day, Walmart deals, Target Circle Week, and other chain midsummer promotions. The National Retail Federation pointed to those kind of promotions as potentially propelling sales, but said there was more. Quote, they said in their release or their commentary, we may be seeing growing inflationary impacts from tariffs since recent data show price increases in commodity goods, particularly non-durables. The monthly chart has turned choppy. You can see there could be a sign of the front running we saw before the tariffs, then a retrenchment after, and now maybe a rebound and some inflation. So it could be a combination of all of that in there. By sector, gas stations up a strong 2.7, but so were sporting goods and hobby stores up 2.4. General merchandise had a good month, 2%. Clothing accessories still strong, 1.7. Restaurants and bars, though, that not a sector that should have much tariff inflation. That was also up a strong 1%, less likely to have tariffs inside of those numbers. Moving on, what you can see here is the NRF added that wages are growing faster than inflation, so consumers have the ability to keep spending. The consensus for Friday for the census data, 0.5% gain with 0.3% ex-autos, Joe.
Is this any of that surprising to you, given maybe we're seeing some weakness in the labor market? We keep hearing anecdotally maybe consumers are a little bit strapped. And then we hear, I don't know, we keep hearing how young people have no money to spend. They're barely making it paycheck to paycheck. It's weird, but the consumer seems okay.
I mean, if you look across the board, what I was interested in, Joe, was some of the discretionary items. Then I looked up the inflation stuff in there. Household furnishings looks like there's some inflation there. Appliances as well. Sporting goods were negative, though, year over year. Toys up 0.8%. So there is some tariff inflation bleeding through, but there are also some gains from the consumer on the discretionary side. So people are employed. As the NRF said, wages are going up faster than inflation. So there is some spending power there.
Right.
It's a very mixed picture, and it's very choppy. And we'll see how much the Fed takes from all of this data this week. You have the inflation data coming, the retail sales data coming. So we'll get a better picture of at least what the data say now about the economy by the end of this week.
If you add additional potential replacements for Jay Powell, does that mean you're dissatisfied with the list that you had? Steve, is that how you would read that?
I'm not sure, Joe. You would know better than I would how the president operates. I'm wondering if it's a distraction or some kind of way of just saying, I don't know. I mean, maybe he doesn't like that. He's not happy with the two Kevins. There's this other gentleman there who was a former Bush economic advisor, and we all must be very excited. He's thinking about Jim Bullard.
I know,
but
he's
the
smart.
question is, does Bullard represent the kind of wholesale change that maybe the president wants to affect over at the Federal Reserve?
Someone says American Idol actually did add contestants one season midway, but it was after the season after COVID. But I don't usually, like The Apprentice, if you're off, you're off. If you're fired, you're fired.
Is that what this is, Joe? A reality game show that we're somehow involved
in? No, we were
in?
trying to figure that out. Normally, you don't add if you've already gotten rid of some people and you've narrowed it down. You don't suddenly add,
That's
2 or 3.
What he said. I will make one quick point, though. The market on the probability scale is not buying Bowman's third cut this year. If you look at it, it's only 42% for that third cut and 60 plus in January. So they're not really buying that third cut right now. It's hot for September, cooler for October, and then cooler again for a third cut in December.